you caution us about getting too excited about, or too high in terms of expectations. We're not going to get new dots today. We're not going to get new estimates from the Fed. What are you going to be focused on?
Yeah, obviously the Fed will matter, but I think that we've just been through a couple of years where the Fed has just been momentous. Almost every meeting, there's been a play about how big a hike would happen. We've had a lot of uncertainty. And really up until quite recently, we're still getting a lot of guidance in these meetings, which Powell's been trying to pull back from in the last few months. So I think this is going to be the kind of the least exciting Fed in the last couple of years. That doesn't mean it won't cause movement. We've got a low participation week. We're right in the middle of summer. There's still going to be some movement today. And we do have core PCE on Friday, which I think is going to be really interesting, perhaps the bigger kind of event. Overall, from the Fed, absolutely 25 basis points today. I think Powell's going to try to refrain from giving too much guidance for the next meeting. He'll still want to err on the side of being slightly hawkish, but that's in the price already, so I'm not expecting a big surprise either way.
Right, it'll be really interesting to see how content he is with what markets are pricing in, the level of cuts that are priced in for next year, whether we get any pushback there or not. But as you say, maybe he tries not to give much in the way of guidance. Let me ask you about where we've been over the last couple of days, though, because it was a good Tuesday and, as you point out, a bit of a soggy Wednesday into the Asia session. But the S&P now 5% away from all-time highs, and we actually got some pretty strong data on consumer confidence out of the US yesterday. Where does that leave your stock view?
Well, I'm still bullish. I mean, as I've kind of mentioned, I think the consumer still drives these markets higher probably until about September, October time. And so, you know, that would maybe tally if you want to make some great narrative that I don't necessarily have much conviction or evidence behind. You could say that would tally with us making that 5%, getting maybe a new fresh record high, sucking everyone in, and then we get the bad news. I still think that going to the final quarter of this year, we're going to have both growth going down and the Fed pushing back on rate cuts, and that's going to be a hard dynamic. But right now, earnings are good, consumer is good, and we don't have the Fed being particularly hawkish in the short term. So the backdrop for stocks, even though US stocks are very expensive, the backdrop for stocks overall remains positive.
And I wonder what you're taking away from the earnings season so far, Mark. We've had some interesting conversations with executives, of course. Some of the things that have stood out have been comments around China, and certainly you can find some guidance on the Chinese macro story if that's what you're looking for. We've also had comments around supply chain normalisation, which have been of interest. Pricing power still very evident in some markets. What stood out to you so far?
I think that the big picture is that, you know, the narrative going to this was that earnings expectations are very depressed and they'd be easy to beat, but the weak link might be tech. And I think, yes, tech's disappointed, but not dramatically so. And it does look that will the disappointment in tech, which is so important, outweigh the beats everywhere else? And it looks like the verdict is coming down and no, that the tech will not outweigh it. And overall, this will be a positive earnings season. Yes, I'm seeing some signs for China, but as you kind of implied in your answer, I think that's if you're hunting for it, you can find it, but I'm not sure it's a very clear message either way.